Bitcoin has rejected from the 24,300 resistance. The question is now, will Bitcoin fall out from the current horizontal macro resistance sitting between 22,600 or push through that 24,300, resulting in a macro continuation? Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. We're going to go ahead and discuss Bitcoin today, talking about the short-term price action specifically, and doing a technical analysis for Bitcoin on the macro and short term. We'll also briefly touch on the structural analysis, the current resistance ranges, and the overall trend for Bitcoin, as well as very briefly the 4-year cycle. We'll also discuss the market data and traditional markets as we usually do in our videos. Before you do get into it, smash the like button, hit the comment button, and of course do subscribe to the channel for all of those things on a daily basis. Now you can also join our Telegram channel. That will be that first link down below. You'll get access to all of our updates, videos, charts, analysis, information, and more. Only the relevant stuff is posted in here, and news events, all that kind of cool stuff. If you are interested in our trading channel, you can join the VIP channel, guys. That is our trading channel. We do much more than just trading signals in here. We give you updates on the market. We give you information on what you should and shouldn't be doing. We give you exclusive altcoin analysis, and we even have a group chat to join. You can see that all of our trade signals have very specific entries, targets, stop losses, etc., such as this APT short we took yesterday. Very specific entries, targets, and stop losses. You can go ahead and find more information in the free channel. Let's go ahead and jump in, and we'll go ahead and start with the market data. So, how are we looking for the month? Because we are in a couple days in now. We're up 1.44% for Feb. So we're still in the green for Feb. Obviously, this uptrend has been a very strong uptrend. It's been one of the strongest uptrends we've seen in Bitcoin for over 2 years, really. If we look at prior months, the last one we saw a month close as bullish as January was October 2021. So insane, guys, insane. Moving on from there, we can see volume and volatility are starting to drop. We have liquidations coming down 25%. We have 24-hour volume dropping around 15 billion to around 89 billion total. And of course, we've had a fair bit of chop in the market over the last 24 hours with liquidations on both sides. And we'll go over that later. I have some liquidations on shorts and some big liquidations on longs on each side, and it's starting to slow down a little bit now. Again, as the price pushes slowly downwards, we're starting to see a little bit more of the longs liquidate, but nothing too extreme in the market as of right now. Looking at the broader markets, we can see the DXY has bounced basically exactly what we said yesterday. We're looking for a bounce at 101 zone, as that is going to be our final level of support. As the DXY rises, we are more likely to see Bitcoin reject, and that is what we have seen on the short term. We can see Bitcoin actually rejected from where we said yesterday, which was going to be about 24,300 level. We rejected perfectly from there and have since actually dropped a decent amount, over 3%. If the DXY continues to rise, we can expect this drop to actually continue, but we will discuss that in the video today when we do our short-term analysis. So DXY is looking decent, guys, but again, it is not looking bullish. For it to look bullish, we do need to be breaking through some of these lows over here that we printed, specifically looking for 103 to break for any sort of actual continuation upwards to start. Until then, this bounce could just end up being any other bounce where we bounce upwards and then just end up heading down, bounce upwards and just end up heading down. So we are looking for that on the short term for the DXY. Moving on, guys, S&P 500 and the Dow Jones. We are seeing the Dow Jones over here is actually in this symmetrical triangle formation. Nothing too extreme over here. Again, symmetrical triangle formations are generally neutral patterns. They are sideways consolidations. This, in fact, is a bullish consolidation. That means we do expect a break upwards as the price entered to this structure from the downside up. So we generally carry throughout momentum. There's a little bit over a 65% chance probability that we do break up from this structure based on structural data. Again, this is a bullish structure as we have entered from the bottom side upward. Again, generally that will continue through. Again, looking for a breakout to determine that direction. So we're looking for a daily close below this trend line or above this trend line to confirm either directional move. Again, we don't really know 100% where this is going to go until that directional close and break actually occurs. Until then, we can expect fluctuations down to the bottom side of this channel, again, which could be added evidence to support that Bitcoin is going to see a healthy correction in the market, not a correction that's going to lead to new lows, but again, something we have to assess as time comes along. It is completely and utterly impossible to predict what is going to happen with this on the short term. Moving on, S&P 500, we have broken upwards from this resistance range. We've said if we broke through here on the daily, we're going to see a continuation. We have seen a continuation here. The question is, are we going to find resistance between these levels? The likelihood that we find resistance between these levels is very high. If we look at our visible range volume profile, we can see that in this range here, we have a small amount of resistance in here. If we go ahead and bring our row size up, you can see some resistance does actually sit around this level, specifically looking at little gaps and little highs over here. So more importantly, looking at 4,200, we're looking at that small little range we've created between these local highs over here where we're currently sitting. So we do have some minor resistances moving upwards here. The next major resistance is going to, of course, be 4,300. But again, to see any sort of continuation in this uptrend here, we're going to have to break through its local resistance to see that continuation. If we fail to break through our local resistance, of course, we can potentially come all the way back down. We will be retesting this lower support here, 4,100. If we do lose that, we can head back down to our POC at 4,000, corresponding with that uptrending trend line and horizontal red line. Moving on, guys, bond yields are looking like they are steadily falling. Again, nothing too concerning here as they are still within their structures. So these structures are going to hold the bond yields as support. Moving on, guys, let's get into the Bitcoin analysis. So we'll start on the macro really quickly, talk about the structure, give you guys some context, jump into the technicals on the macro, do our short term, and then do our technicals on the short term. So give you guys some context over here. Bitcoin did break out of a falling wedge structure. This was by no surprise was going to happen. Again, this is a bullish consolidation, dropping volatility, dropping volume, dropping price, of course, and of course we've had compression. So generally, we have these four things occur, we generally have bullish consolidation. If you go ahead and look at the downtrend which we were in, another way to look at it, we had this downtrending trend line over here. This was our bear market resistance. Okay, look at the gradient between the downtrending resistance of our channel. Okay, this was a macro channel compared to the downtrending resistance of that falling wedge. The falling wedge clearly is a less steep downtrending resistance. What does this signify? Well, it signifies a decrease in bearish selling pressure. It signifies a decrease in velocity, a decrease in momentum, a decrease in volatility, and more importantly, a decrease in bearish volume. All of that in a falling wedge structure, which is a bullish reversal pattern, is actually bullish consolidation at the end of a downtrend. That resulted in a continuation upwards. Our target for the continuation upwards was 22,600 as per our analysis a few weeks prior to this breaking upwards. You can see that that target perfectly reached upon the breakout point, which was this lower part of resistance here, 22,600. In fact, it went all the way up to meet the upper point of resistance right over here, which was going to be acting as the key rejection point for the next leg upwards for Bitcoin. This local high here is the point of which we need to break above to continue upwards. This is going to be that current resistance level we've rejected from at 24,300, and we'll be discussing this today and what it all means and where Bitcoin will go. So on the macro chart right now, we are in a reversal. For this reversal to develop into a uptrend, we need to break through this level here. If we do not break through that level here, we are still very much prone to a potential rejection and continuation downwards. Will that continuation downwards lead to new lows? That is up for debate. I would say it is very unlikely that continuation downwards leads to new lows, but again, guys, until we create a macro uptrend, technically it is possible. Technically it is possible. As you already know, guys, if you have been following me already, you would know that we did actually acquire Bitcoin very cheap. We bought Bitcoin way back. This is from June 2014. We bought these levels here. We even got 16,500. We're up 45% on that bag. So we are bullish. We do expect Bitcoin to rally. But again, even though we are bullish, even though we have Bitcoin, even though we expect the price to go up, even though on the macro chart we are bullish ever since this falling wedge breakout, we do look at the data objectively. We look at the price action without bias. and without allowing our self-serving bias to impact our analysis. The reality is at resistance, the price is at resistance, and therefore a pullback is likely. And until we clear that resistance range, the price action is going to consolidate, it's going to drop in volatility, it's going to drop in momentum, and it's going to look like it's going to pull back. And if it does pull back, we will be active and ready to take those shorts and profit like we have been doing already. And if it does continue upwards, we'll keep our positions and continue on that trend and make more money. So either way we play it, we have a plan, we have an opportunity, and we'll be executing because we are prepared. If you blind yourself to potentials, you miss opportunities and you suffer the consequences. So always analyze charts objectively, regardless of whether or not that data you find when analyzing is going to fit your narrative and bias and be self-serving or potentially damaging to what your expectations are. Sometimes the hard truths will save you money rather than blinding you and only eating up that hopium to serve your current biases and narratives, okay? Let's go ahead and move on, guys. So the short term for Bitcoin, as we already know, guys, we had this bearish divergence. This bearish divergence has been present for quite some time now, right? We've been seeing decreasing bullish momentum on the 4-hour chart for quite some time. Again, what does this signify, guys? When we see uptrending price action, we see downtrending momentum, it shows us a discrepancy between the two. More importantly, what it actually specifically tells us, it tells us that the trend is weakening. It is starting to lose steam. Why is that so important? Because price action moves on volume, momentum, speed, velocity, okay? So we start to lose those things, it is very unlikely we have the strength to push through these major resistance zones, and that increases the probability that we will reject and continue through downwards that resistance zone and obviously have a correction. Now you have to align yourself with probabilities when trading. Trading is a numbers game. You cannot be right all the time, but if you apply your analysis, if you align yourself with probabilities over a period of time, you will be statistically profitable. You will have a profitable portfolio, you will have a profitable strategy, etc., etc. Okay, if you're trading on emotions, you're pretty much always going to be wrong. So, looking at the data over here, the trend is definitely weakening. On the larger time frames, such as the 6 hours, technically we are still in an uptrend, right? We are in an uptrend even over into a 4-hour chart. We are technically still in an uptrend, okay? I want to make this very clear. The uptrend is still present, but the uptrend is weakening. Okay, make it very clear. The uptrend is present, but the uptrend is weakening. While the uptrend remains, the likelihood that we break upwards here is still there. There is still a possibility this continues upwards and breaks upward to 25,000, okay? 25,000 being that next resistance level on the chart that we need to break through, which is going to be our final point of confirmation for that rally up to 28, okay? 23,400 is the upper resistance of the horizontal resistance. 25,000 is the trigger for a continuation upwards. So whilst that uptrend remains, we still do have the potential to rally upwards, but this uptrend is weakening, and therefore the probability that we don't rally upwards and the probability that we reject and continue downwards is increasing on a daily basis. It's been increasing for a while now. It's increasing on a daily basis. Moving to the hourly chart, we can even see here on the 2-hour chart, we are technically still in an uptrend. But let's go ahead and drop the time frame back to 4 hours and take a look at some other indicators that predict the overall strength of a trend. One of the ones I really like to look at is the Gaussian channel, and I think the Gaussian channel is a great indicator when predicting overall trend strength. What we can see here on the Gaussian channel is, again, we are very much in an uptrend. The price has been remaining above that Gaussian channel. What we do see here is a glimmer of weakness. The price entered the Gaussian channel but bounced off the midline. This again is signifying weakness and a decrease in bullish strength in the trend. Generally, when we see the price action push through the Gaussian channel, we most of the time see it end up going right through it. So looking on this 4-hourly chart, guys, I'd be waiting for a break through this level to confirm that this uptrend that we are in has officially flipped bearish, okay? Officially flipped bearish. So I want you to remember that. Technically, this uptrend is still going, okay? It is still technically active. It will flip bearish once we flip through this Gaussian channel midline. That's going to signify a flip in the strength of a trend. This weakness that is present in the momentum and the moving averages are signifying a potential increased probability that does occur. Once we do break through our resistance range, a rejection from this range will be confirmed, okay? So they happen at different points in times. Depending on your risk tolerance, will determine how many validation points you personally require before you deem the risk worth the reward, or you deem the reward worth the risk, should I say. So validation point number 1 is going to be the bearish divergence. That is a dropping in momentum. For some people, that is enough. They consider that as enough of an indication to enter shorts. Validation point number 2 will be the reversal of the trend. The trend has not yet reversed. We can look for a breakthrough of 4-hour Gaussian channel. We can also look for closes below the 6-hour 50 EMA, which is going to be that red line, which basically corresponds to around about the same levels of Gaussian channel. And the third point of validation is going to be a loss of these structural lows over here, okay, which is going to confirm again a structural break, and that will be a third validation point for a continuation toward the downside. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Okay guys, we're going to go ahead and finish up the video with the 4-year cycle and a macro technical analysis. We'll start off with the 4-year cycle over here on the left-hand side. What you can see is our date range trend for the 4-year cycle. Our red zones are, of course, our bear markets. Our gray zones are, of course, the beginning of the uptrend. And, of course, our green zones are the bull markets. So you can see that our average bear market has lasted between 12 to 13 months. That has been relative and, again, accurate for the bear market of 2021 to 2022. The gray zones are our uptrend phases. They move between 16 to 17 months. You can see over here, that would take us to around April 2024. And our bull markets move between 19 to 18 months again. That will take us upwards to around October 2025. So from our date range trend, what we can see here is we can expect the bull market to start around April 2024 and end around October 2025. With that being said, guys, the uptrend does initiate much sooner. As you have already seen, guys, the uptrend does not indicate the start of the bull market. The start of the bull market is determined by different characteristics, not when the market starts rallying again. As we can see, guys, from local bottoms prior to previous bear markets, the price has generally jumped quite a considerable amount. If we take to where the bull market starts, which is a monthly close candle above that that baseline on Ichimoku cloud, around 115%. Looking at 2018, we saw around 190%. So it's not to be confused that the bull market is back. The bull market is definitely not back. The bull market comes back when we have 2 points of validation. Those 2 points are, number 1, a monthly candle close above this red line, which is going to be the baseline of the Ichimoku cloud on the monthly chart. And point number 2 is a monthly candle close above our yearly low support for the prior bull market, which is now sitting around $30,000. Those are the 2 points we need to see for a bull market to officially be triggered. The uptrend will, of course, have to start and have to take us upwards to 30,000 to even get that trigger, but it is not to be mistaken for a bull market. Going back to this chart, guys, we are, of course, in a macro reversal here. This is a reversal. Whether the uptrend continues is determined whether or not we break through this range. Hypothetically, we break through this range. We are pushing into about 28 to 30,000, where it's the next resistance. This is going to be called the bull market trigger, okay? Meaning that this is a major rejection point, as it is going to be the yearly low resistance for our bull market. This is probably one of the biggest and most important horizontal ranges on Bitcoin's chart, as it's going to determine whether or not we follow the 4-year cycle as prior cycles, push through this range and facilitate a bull market, or whether or not we reject. It's going to be a very important range if we do and when we do retest that. Moving on, guys, let's do our technical analysis. So remember, guys, we can see from a technical standpoint of our Ichimoku cloud here, we have officially bottomed. Every single time we see that baseline cross through the clouds, we generally see a bottom signal print, as you can see once more. When we do see the baseline cross back through the clouds again to the top side, we generally see the bull market start. Again, we just talked about that in the prior clip. Moving on, guys, from here, we can take a look at some other indicators. So let's go ahead and get rid of the Ichimoku cloud for just a moment and get up some new indicators. An indicator I've been seeing a lot of people talk about lately is, of course, going to be the moving average, particularly that 200 moving average, I think it is, on the weekly chart. So let's go ahead and take a look at that now and discuss what that means. So as you can see here, guys, this is something very interesting, because in prior cycles, we never saw this. We never saw the price actually go back below 200. And the 200 moving average is not technically a resistance, because it is just an average price over a period of time, and it can't actually act as a resistance, but it is a key point when it comes to predicting whether or not the trend is flipped. And I have been saying already, guys, we are still technically not in a macro uptrend according to our structural zones, and according to the 200 moving average, again, that confirms it. We are technically not in a macro uptrend, because to be in a macro uptrend on this scale, the 200 moving average has to technically be broken. So we do need to break above the 200. Now, where is the 200 sitting? Guess where it's sitting? It's sitting at 25,000. Literally no surprise. It is sitting right at that horizontal trigger we need to see a continuation to 28 and 30,000. Very important stuff, guys. We are sitting underneath that currently. It is a very important level we do need to break above. We'll be looking at as the weeks come. Moving on from there, guys, let's take a look one more time at our Gaussian channel. We'll take a look on the weekly chart. We can see, again, the Gaussian channel has not signified any significant shift on the weekly chart. Again, it is quite a lagging indicator, so it is better used down on smaller time frames. Let's go down to a 3-day chart. On the 3-day chart, it is looking really good. We have broken through the Gaussian channel on the 3-day chart. You can see when we generally break through a Gaussian channel, we generally do continue upwards. There's only been a few instances on the larger time frame where we haven't. Main instance was that 2020 COVID crash. But prior to that, when we generally break through a Gaussian channel, we do usually continue that trend upwards. It is a significant shift in the trend of the chart. We can see our breakout point occurred at 20,000, which we've said was another key validation point, and it did end up pushing the price higher. So according to the Gaussian channel, on anywhere between a 1-day to a 5-day chart, the trend is macro. It is flipped on the macro chart. But if you go higher, it is not quite yet flipped. And that is what we're saying. We're not quite in a macro uptrend yet, and that supports it. Looking at our market cipher over here, our smaller time moving averages are starting to push above our larger time moving average, with 50 MA again looking very, very good. But as soon as we start moving to a larger time frame, we can see it starts to smooth out a bit and it gets a little bit more accurate. We are currently at resistance. This resistance level is still sitting around the same level as the 200 moving average on that weekly chart, which is around 24,700. Again, indicating that not only is there a lot of resistance above us, but this resistance is an incredibly important resistance for a macro chart for Bitcoin, and definitely something to keep your eyes on. I'm going to end the video there, guys. I hope you enjoyed. I won't be doing a video tomorrow, but we'll be back on Sunday for daily videos. If you have any questions, leave them down below. I'll be sure to get back to you. And I hope you enjoyed, and we'll see you guys in the next one. But before we finish off, before I do forget, the Crypto Academy, guys. If you're interested in learning how to chart, analyze, trade, all that information we do in these videos, if you're interested in learning what I do and how I do it, this is what we'll teach you guys. We do market data, we do charting patterns, we do structural analysis, candlesticks, technical indicators, we teach you how to trade, market psychology, risk management, you name it, all of us in here. Go ahead and contact us for more information, and we'll send you through the details. Thanks, guys. I'll see you tomorrow.